people build £1 million portfolio? Hi guys, my name is Muzzie, and to answer the question, I think it's a bit of a long-winded one, but it's start now, get perfect later. So one of the things that we struggle with, based on conversations that we have with people, is I can't start investing in property right now because interest rates, because political reasons, because I haven't got the funds, because my credit rating, the list goes on and on, okay? You're never gonna be in a situation where everything lines up, everything is perfect for you to say, now I start. I've got the right amount of money. There's different ways that you can start investing without any money, believe it or not. So in a long-winded way, how do you build £1 million portfolio? You just start now. Just start now, get perfect later.
Check.
I think this is the only mark that works.
Check. I love how these guys who are property millionaires come up here and say, just start now. It's easy, just start now. What are you waiting for? How do I start? Tatenda, if I was to start working on property or building a property portfolio today, how would I start?
For me, I would say start with the strategy. What do you have? What's the plan in the end? You want to build £1 million. But what's my strategy to get there? Find the right team to be around you, whether it's a mortgage broker, whether it's an accountant, whether it's a specialist in whatever you're trying to do. Find the right builders. Because if you don't have those people, the work is going to take a long time and you're now going to be paying for the properties you have. So have the right power team around you and get your affairs in order and you will be good. If you don't do that and you try to DIY it yourself, you might find yourself struggling.
Who's the most important person in that power team? And for those that may know, what is a power team?
So a power team is basically what I just listed now. Find your builder, find your accountant, find your tax expert. It seems like it's a lot of people and it seems like a lot of expenses, but those people can save you money in the long term. Yeah? So what I'm just trying to say is, who's the most important in all of those things? I think they're all equally important depending on where you are. So when you start today, what's my strategy? Find your broker, find your mortgage guy. How do I get the money? Find that person to say, find the accountant, how do I structure my affairs? How do I make sure I'm not paying too much, but equally at the same time, I'm not paying too little, because HMRC will find you.
HMRC will find you.
True.
Munya, you look like someone who knows about people that have dealt with HMRC in a positive way and maybe in a not so positive way. Who is HMRC and why should we be worried? Or should we be worried about HMRC?
HMRC...
Just bring your mic a bit closer. Thank you.
HMRC, they are the regulator for tax and exercise in this country. So they are responsible for collecting our taxes, whether it's VAT, PAYE, or corporation tax. I don't think there is anything to be worried with any regulator, as long as they're following the rules. I find them very useful myself because on their website they've got a lot of useful information that can help to inform you how to mitigate taxes and operate your business within the law. So I don't think there's anything to worry with HMRC, as long as you're doing everything by the book.
Okay, wonderful. So I can have my serviced accommodation business, because we have a serviced accommodation guru here, and I'm renting out my flat in London that only allows me to do serviced accommodation for 3 months of a year, but I can do it for the whole year because they'll never find out. And all the money that I make, I don't have to declare tax because I'm going to work and I'm paying PAYE. So all the money I make on the side, Stanford, do I have to declare any tax? Or Tendayi, do you want to take this one? Do I have to declare any tax for all the extra income I've made? Because I've already paid PAYE. So do I need to pay any more tax?
Yes, you do need to pay tax because...
We can't hear you.
Yes, you do need to pay tax. So you need to stay above board, because I think one of the things that happens is the wonderful thing about the system is it'll catch up with you at some point. So start off as you mean to go off, put the right systems in place, and you can go to sleep at night. The amount of cases we've seen over the years where 10 years down the line, HMRC finds you because of one little incident, and they start to track you down, and everything that you've been building collapses. Was it Hush Puppy a few years ago? Was it that Hush Puppy guy in Dubai? One little incident will catch you out. So just start right. It is fraudulent not to pay your taxes, so stay out of trouble, yeah.
Okay, we don't like the F word, so we'll stay away from the F word. Stanford, is there anything you can do in terms of strategy to protect your tax position, or any tax wrappers that you can use so that your income, you can keep as much of that income as possible?
Hello. Yes, you need to do something. In everything we do business-wise, you need to get the professionals to help you in that. When it comes to tax, you need to have a tax advisor who specializes in that, and they can help you to protect your assets and what you should be doing or not doing so that you don't fall out of the law. Because as Tendayi has said, if they catch you later, the HMRC, I've had cases right now that I'm dealing with whereby companies have been fined over $500,000 because they haven't been doing their tax returns properly. So please use a tax advisor so that you get everything right.
Tax advisor sounds expensive. I'm already paying a conveyancer, and maybe I'm paying a property sourcer. I have to maybe pay a builder to do the work. I have to pay stamp duty, and now I have to pay a tax advisor. Is there going to be any money left?
Yes, it's better to do that way, or you won't have anything left at all. You might as well not start business if you don't want to pay the professionals. There's no way out. There's an African proverb that says, try ignorance, and it's more expensive than doing things the right way. So pay someone, because if you are doing a business, the end result is to make a profit. All those expenses are deductible anyway, because it's part of the business. So don't try to dodge it, because you'll end up out of business. One of my clients at the moment, the HMRC has taken his house worth 600,000 and a buy-to-let worth 200,000 because he couldn't pay a bill of 470,000 and has been banned from operating as a company. So now he's got no business, he's nobody. So don't get into that kind of things.
So for those maybe that didn't hear, just to reiterate, those numbers were 600,000 plus 200,000 that he's losing because of not putting certain structures in place. So I heard you say your business. So does that mean you should register a limited company for your properties? Is that something that you'd recommend? Is that a good thing or a bad thing to do? Tatenda, what do you think?
So that comes back to the statement I made earlier. Start with the end in mind. Not everybody wants to hold their property portfolio until their last moments. Some people want to pass that on. Some people want to hold it for 10 years, have some income, sell up, go traveling for the rest of the world. So to say, should you set up as a company or should you do it in personal name, is very dependent on what your end exit is. If you're looking to sell within 10 years, I wouldn't say then have it as a company, because you have to pay for the finances of running a company for 10 years. Then when you sell the company or sell up the assets in the company, that money doesn't belong to you, it belongs to the company, and you have to pay taxation on that property again at the end. So it's not always wise to then say, well, just buying a company. It's actually very dependent on what your end goal is. Do you want to go back and live in Zimbabwe happily ever after and you don't worry about anything here? I may say, well, doing this in your personal name is better. If you're saying, I'm going to set up a company because I want to give it to my kids who are going to be here, and their kids, they're all going to get dividends for lifetime. Well, set up a company, and giving up shares in that company over your lifetime is a lot better. The end in mind is very imperative to starting. If you don't start with that in mind and you just try to ad-lib, that power tier will seem like it's an expensive expense you don't need. Actually, it's something you require because it will save you so much more money in the long term.
Thank you, Tatenda. Is this mic working? Yes, it is. Tendayi, Tatenda mentioned something which I think is quite interesting, which is if you have that property and you want to leave that to your kids or to your kids' kids, and for those of us, I think the Bible says that a wise man leaves an inheritance for his children's children, not his children. So if any of my children are watching, not his children, but his children's children. Not that I'm in a rush to be a granddad, but that's a story for another day. So, generational wealth. Tendayi, tell me about generational wealth and if it's important or why it matters.
So I think, like you were saying, Tatenda, you have to be in it for the long goal. What is the aim and objective towards the end? Life insurance, you'll be amazed at how many people don't actually have life insurance for starters. So you've taken out a big debt, a really good way of actually making sure that you're leaving the next generation with a debt-free portfolio. So they are, they're building from giants of, the shoulders of giants. Set that up, put it in trust, be clear, who are you leaving the assets for? A lot of us are investing here, investing back home. You put the asset in your brother, in your cousin's name, and with the aim of, okay, we're going to it. When you die, is it clear somewhere that it's actually your asset? Is it going to go to your lineage going forward? So it's just being really clear, putting wills in place, putting trusts, putting all the legal structures in place that make sure that you're passing it on wisely to who you intend it to go to. Because we're all here for a limited time, and just as you're building, make sure you're tightening and the loops as you're going along. Yeah.
Amazing. So now you want me to pay someone else another fee to put trusts and other structures in place. So by the time I've paid everyone, I've got no money left. Munya, a lot of people today are talking about investing back home, back in Zim. What's your take on whether we should focus on investing here in the UK, focus on investing in Zimbabwe, focus on investing in Portugal, investing in Dubai, and don't worry, all the developers are outside, no one is going to attack you, so just tell the truth.
That's a trap, is it? That's a booby trap, I think. He's trapping me here. But the only thing I can say about investing is always stick to what you know. I would not say choose this country. Of course, we have to be loyal. Choose Zim first. Choose Zim. But for me, I do invest in the UK. I don't have a property in Zim at the moment. I'm looking for one. The reason why I do it in the UK at the moment is quite straightforward for me because I am here. I can manage it easier here. And I'm not saying that there are no cash flows in Zim, but here I can easily generate cash flows from day one after purchase. I think in other markets you have to spend 100,000 building, maybe over a 3-year period doing that. Here I don't need to do that. I do it from day one. I'm already cash flowing. So for me, it's cash flow, scalability. I want to repeat it again, to do repeat deals. I don't have that kind of network in Zim at the moment to be able to do that. So yeah, that's for me, at this moment, I prefer to do it here. But I'm also looking at Zim.
Wonderful. Do we have any questions in the audience? No questions? Okay, cool. I can do this all day long. Sir, DJ, our microphones are running out of battery. Okay, so how do I actually go about buying these properties? Because we're talking 100,000, 200, 300,000, 500,000 if you're down in the southeast. Where do I get the money to be able to buy these properties? Stanford or Tatenda, where do I get, do you want to go? Where do I raise the money to buy these properties?
I like this question because I actually thought if I came here and never talk about this, I'll probably have failed. I hope I can give a good case on this one. I always say what you do is first you skill yourself, and then after skilling yourself, then you start earning. And then from your earnings, you save, try to live below your means, and below your means, so you save, and then you buy. Of course, you have to do it for the first time. You have to buy the first property, and then you buy the second, you buy the fourth, and when you buy the fourth, you get to what my colleague here would say, a portfolio investor. And I think when you get to 4, you get to a point where you have significantly de-risked in the property market, I think, here in the UK. Because I always say when you get to 4, you get to a point where maybe every 2 years, those 4 will buy you another property. And then in 6 years' time, 8 years' time, you probably have doubled the number. And every year you now, if you've got 8, every year you start buying a property every year just from the income from those properties. So I always believe that the first thing is skill yourself and live below your means, buy your first property, and repeat that process multiple times.
I have a challenge with a couple of things that you said. I have 4 kids, so living below my means is very difficult because kids are expensive. I don't know if you have kids, but kids are very, very expensive. That's number 1. Number 2, you said that you build the property portfolio slowly. So you buy one, then maybe after a couple of years you buy another, and then after a couple of years you buy maybe another 2, and so on and so forth. So by the time you've done that, maybe it's 10 years for you to have a bit of a small portfolio. Why don't I just take my money and just go and buy Bitcoin, and my Bitcoin will double by next week? Muzzie, do you want to answer that one? You look like a Bitcoin investor.
I am not a Bitcoin investor. So I think this is talking about property empire, just to let you know. In terms of the Bitcoin element, I can't tell you anything about that, and I can't compare property to any other investment strategy. I can only talk about property. The particular question about raising funds and how exactly you can actually buy at the start, I just wanted to point out that ultimately when you're buying a house or when you're investing in any strategy, you require 3 things essentially. 1 is the money, which is what most people think about, because whatever it is that you don't have becomes the pedestal. That's what people think is the most important. You need money, you need time, you need experience. But the truth is, none of these need to be yours. For you to be actually able to do things, none of them.
Whoa. Pause. I need money to buy a house.
Yeah.
My house. But the money doesn't need to be my money.
Correct.
Huh?
Yes. So none of the 3 things need to be yours. Here's the thing. You always have at least one of the 3 things, either money, time, or experience. Most people have time, but they don't have the money or the experience. So what I usually recommend to people is, if you've got time, spend your time to gain the knowledge, the experience, which is what Munya was talking about. You need to upskill yourself. If you spend your time to get the knowledge, you now got 2 things out of the 3 that are required. You then become more valuable to the person who has the money. Believe it or not, there's people at the moment who are generating that much cash in their businesses, they're happy to actually invest it in someone else. So you use their money to purchase your properties and actually get yourself started. So because of those 3 things required, you consider what it is that you have and what you need, and start leveraging other people's time, leverage other people's experiences, and leverage other people's money. So we actually build our portfolio now based on other people's money, right? And you actually build your portfolio that way. Your money, if you're actually generating enough money at the moment, people that have a lot of money understand that it's not safe in a bank, not as safe as it used to be, and it doesn't grow as fast in a bank either. So you take their money to build your portfolio and actually pay it back at a higher interest rate than the banks can actually do that. You work together as JV partners. So this is the quickest way to actually build one, as well as doing the saving element, where you're living below your means and actually utilizing the income to actually purchase properties. There's a different speed in the 2, but you can actually combine the 2 of them to actually make it happen. I hope that kind of answers the question.
I think that answered the question even better than I expected. Thank you very much. Tendayi, we're talking about borrowing money to buy houses. What are the things that, if I want to borrow money, what do I need to know or have in place ahead of time before I even start applying or even start looking for houses?
Your credit score.
You said good?
Yeah, your credit. Just
good credit.
Good credit. It helps. It's not a stumbling block if it's bad, but it just means you're going to pay above the odds for having bad credit. So where for the same amount of borrowing, someone's paying 1,500, you may be paying 2,000. So you're actually losing compared to somebody else. So whenever you borrow silly things, store cards, avoid having so many different credits, a store card for this one and that one and that one, because when you're somebody who borrows consistently, it looks like you're desperate for money and it looks bad in the lender's eyes. So yeah, make sure that you are on top of your credit, get a credit karma, be on top of it. When someone asks you to take a loan on their behalf, be sure that that person can afford it if they're close, because you know the amount of scenarios where someone defaults and gets a CCJ because they took money out for a loan to lend to their sister and they didn't pay it back, and then you're the one in trouble. So your credit report is like your financial passport. Look after it.
Amazing. Thank you very much. Ladies and gents, please join me in giving a round of applause to the panelists.